Hello, good afternoon. You're watching Closing Trades on 80 now. I'm Anisha Jain. With me is Aisha Faridi, and the closing trades are very wobbly at the moment. Yes, we are holding on to the 21,600 mark, but a lot of jagged edges throughout the trading session. We have been quite wobbly from the start itself, but at least a bit of green is what we are witnessing. But what has been a consistent pillar of strength today has been the public sector entities. I mean, from the top, 10 companies, if I look at it, almost 8 to 9 are from the public sector entities, whether it is in RVNL, which is up 18%, GIC up 12%, New India Assurance, Indian Renewable Energy, Development Authority, IRFCL, REC, PFC, and even ONGC, as well as other names like NTPC from the entire public sector entity space is what is perking up. Now, IRFC specifically has managed to cross the 2 lakh crore market cap. We have been talking about it in terms of the surge that the stock has seen, but it's even bigger than some of the Nifty companies, the likes of M&M, etc. So the market capitalization has gone past the level of 2 lakh crore rupees on that one. We're also dealing with a lot of earnings. So of course, Ultratech reported a good set of numbers on an intraday basis. Central Bank of India was another one that managed to hold out, Sri Digvijay Cement. But then there are other result reactions like India Mart as well as Home First on the green list. While on the losing side, IndusInd continues to come under pressure. Almost a 3 to 4% cut is what we have seen there. Metro, Shoppers Stop, these are some of the other names which are still trading in the red. But the other stock, Aisha, which is very firmly in the green today is Bharti Airtel. That has been consistently gaining ground. It's up, 4%? And then, of course, ONGC is the other one, which is perking up in the last few minutes on account of the comments that came in from the oil minister to one of the global media houses talking about how they are not giving any directive to the oil marketing companies regarding price cuts.
Oh yeah, absolutely. ONGC, Bharti leading, as are some of the PSUs, as Anisha just flagged off. And so are some stock-specific, result-specific reactions as well. Aarti Industries as well, for instance, they've got an initiation of a buy from the House of MK, target 750. That's one of your top F&O movers. This afternoon, MK has again initiated an ad with a target price of 2,600 on Deepak Nitride. That's the other stock which is holding out. And Z Enterprises, that continues to be the one specific news flow. It seems that Sony board is going to be meeting today. We will, of course, tell you what more our reporter is picking up on that. But it seems like shortly there is going to be a board meet from Sony in order to decide or take some decisive call with regards to the merger with Z. But that's Z under pressure, significantly so, 5.5% lower as we speak right now. There's India Mart, which is also seeing a very strong earnings reaction. That stock is holding up 6%. There's Manappuram, which is higher by 5%. And yes, REC, IRCTC, you can't take your eyes off from these names and the kind of flurry that you're seeing on this. The one case in point that you must flag off is IndusInd Bank. Look at the intraday graph of the stock. An inline set of numbers. The stock started off marginally in the green, and from there it's been a consistent drift down for the stock. Currently at the session lows, it's down 4% right now in the futures and a 3.5% cut coming in the cash markets. Also HDFC Bank, even though the stock jumped up overnight on the ADR, it started off in the green, but from there it's given up all of its morning gains. It's now down at the lowest point in the day, down 1% right now. Kotak ahead of its numbers is down 1.25%, and I don't think there is a significant meaningful move on either ICICI Bank, which also awaits its numbers tomorrow. No, I stand corrected that ICICI Bank has managed to stand steady, 1.5% higher. In fact, it's back at that 4-digit mark in trade. But SBI is the one which is under pressure today. And Asian Paints also hasn't seen any recovery, still in the red after its numbers. Let's take it across now to Naresh and Kunal and find out what they're making of the trading day. Kunal, hi, afternoon. Not a bad day. In line with the rest of the globe, we're actually holding out quite okay, irrespective of some of the individual banking underperformers.
Well, yeah, if you look at the Nifty, of course, it's a 150-point uptick for the index. But if you look at Bank Nifty, it's a retracement of more than 300 points from the intraday highs. So that itself tells you the net market impact, that it's more skewed towards weakness or underperformance towards the banking names, and specifically the private sector names. Some of the names that you mentioned, for example, IndusInd Bank, post results, HDFC Bank continue to fall below that 1500 mark, and there has been a consistent rise in the open interest for many of these private sector banking names. I think that's adding towards the to salt to the injury for many of the private sector banking stocks, especially in the last 3-4 days of this correction for these names. So I think till the time we don't see a reverse of stance from from option writers or even from the guys who are taking positions on the future segment, I think till that time we would probably expect that the underperformance in the bank Nifty may continue. The good part is that you're seeing a lot of recovery across many of the other sectors. Railways, PSU stocks have seen very good recovery. Oil and gas stocks have also made a fresh swing high for themselves. So mid cap end of the market as well as the PSU end of the market is still quite strong. So I believe that it's best to try and focus more on stock specific till the time there's volatility and selling on the bank Nifty settles down.
Well, yes, and those public sector entities can't take your eyes off, and I would request my producer to follow me when I point out RVNL, Hoodco, GIC, IREDA, New India Assurance, IRFCL, NBCC. These are some of the top names which are up over 10% in the trading session. Naresh, from this entire list and the rest of the PSU basket as well, oil and gas, etc. included, which are the top recommendations right now?
So, been a favorite, recent favorite which I've been recommending is ONGC, which continues to look promising. The whole oil and gas space. BPCL, which has given a fresh breakout, that looks interesting. The railway pack seems overdone in the short term, and we could be making a euphoric top in a lot of these names. The only one which has not done as well as RITES, which has also given a breakout, still yet to make a new all-time high. So out of all the railway pack names, it's only RITES which still fits the bill in terms of risk reward. In terms of the whole PSU pack, ONGC, BPCL still look promising. In mining, one can still look at NMDC and MOIL. So there are still spots, but all the names in the railway pack is one where one should be careful.
Right, okay, that's the take coming in on the PSE pack. Z, of course, is down today. IndusInd Bank is sharply lower. Kunal, to the point that you were making about the Nifty Bank, because, the Nifty seems like a standalone case and the Nifty Bank is doing its own jig. IndusInd Bank and HDFC Bank, once again, which has completely given up its gains.
Well, yeah. So I think maybe the markets are looking out for some sort of reasons for the space to correct. But I think the weakness for many of these private sector banks is not stalling, and there is no alternate option for the markets to try and find out into other private sector banking names. So, for example, even if ICICI Bank is up some 1.5%, mild recovery into the other PSU end of the the banking names, it's not adding towards a major weight because of the weightage for many of these large cap private sector banking names like HDFC Bank, which are still showing signs of weakness. For example, there was a 25% jump in the open interest day before yesterday when HDFC Bank had fallen down by 8%. Yesterday, even after that 4% downtick, the stock was seen an addition of more than 14 to 15%. So at net OI add of almost 40-45% for stocks like HDFC Bank in the last 2 days, and that generally indicates that the weakness may persist for some more time. And I think maybe IndusInd Bank we may see a similar kind of a phenomena. So I think that is one of the critical concerns for the markets. With this rise in open interest and the fall in prices, I believe that the trend on the downside may continue for them.
Okay, trend might continue on the downside. Let me actually toss that question to Mahantesh Sabra joining us on the show as well. Mahantesh, your reading of IndusInd numbers?
So the results are quite steady. If you notice that the NIMs are steadier, there is a small bit of NPA reduction. The cost to income ratio is more or less steady as it was in Q2. But the important part is now that we have gone into a new year, most of these banks are now showing a momentum loss in terms of either cost controls, either NPA controls, or margin expansion. So we are not seeing major margin expansion. We are not seeing major reduction in NPA because it's already at a low base, and the costs are rising because most of them are getting into expanding their network and so on and so forth. So what has really happened is that the market is therefore trying to relook and assess that if these costs are getting rebased or rebalanced upwards, some of these costs are not favorable, then the estimates are getting revised downwards.
Yeah, absolutely. That's the take on IndusInd Bank. Although, Mahantesh, you feel the mood is completely different for an ICICI Bank, for instance, because that's also due for its numbers tomorrow, along with, of course, Kotak. But we'll talk about Kotak later, ICICI Bank specifically.
So, the expectation for ICICI Bank is that they will have better credit growth ahead, and of all the banks, the mood now is going away from personal banking space to corporate banking space, and people are trying to figure out which are those banks which will do relatively better in the corporate banking space. And therefore, some names do stand out. ICICI Bank is one of them. SBI is obviously another name that stands out when it comes to corporate banking because of their past the way the banks have worked. The personal banking space, or the banks that are attaching a lot of importance to growth in the personal banking space, will probably lack. That is why we saw HDFC Bank not doing really better among the banks, and some of the ratios are not improving thereafter. So the NIM expansion possibility exists only in the corporate bank space right now, and probably ICICI Bank, SBI are the ones that could relatively do better in the entire large cap banking space.
Let's see whether they fare better or not. But for the time being, let me toss it to Gaurav to get a sense as to what the street is penciling in for now from ICICI Bank as well as Kotak Mahindra Bank tomorrow.
Yes. So two big banks will come up with the results, ICICI Bank and Kotak Mahindra Bank, and let's see what consensus is expecting from these banks. If we talk about ICICI Bank on operational fronts, net interest income is expected to increase almost by 12% on a YOY basis. PAT is expected to increase almost by 20% on a YOY basis because we may see some kind of lower provisions from the bank in this quarter. Loan book and deposits are expected to rise almost by 19 to 20% on a YOY basis this quarter, and we may see some fall in PPOP, which is pre-provisional operating profit, because cost of funds may rise. Let's not forget that bank has one of the lowest costs of fund amongst the peers, but given that cost of funds will rise and CASA is also expected to remain weak, the NIMS trajectory may also remain weak in this quarter, and we may see some kind of contraction in the NIMS by 15 bips on a quarter-on-quarter basis, and that is why the key commentary which would come from the management on terms of cost of funds, on the NIMS trajectory going ahead, and the loan growth rate will be key important thing for the bank. If we talk about the asset quality, however, consensus believes that credit quality and slippages are expected to remain lower for the quarter for the bank. Let's also talk about Kotak Mahindra Bank, where net interest income is expected to increase almost by 14.5%. PAT is expected to increase almost by 16.5%, and PPOP growth is expected at 22% on a YOY basis. Deposit and advances will also increase almost in the range of 18 to 20%, the healthy growth on a YOY basis. But NIMS again are expected to bottom out in this quarter as well. Because we may see some kind of fall of 12 to 15 bips on a quarter-on-quarter basis on the NIMS, and we may see them somewhere in the range of 5.1%. Let's not forget that deposit franchise for this bank is actually weaker if we compare it amongst the three largest banks, and that is why any trajectory and any commentary coming on the trajectory of the NIMS, cost of funds, and the trajectory that the bank would follow on the CASA ratio will be important for the bank for tracking going ahead. Let's also keep an eye on any commentary from the new CEO, Mr. Ashok Vaswani, on business growth strategy, because that will also be a key point for the bank in this quarter.
Okay, so those were the expectations from Kotak Mahindra Bank, but I also want your take, Mahantesh, regarding the earnings of Ultratech Cement. First cement major to report its earnings, and it was a decent set, not a big disappointment, neither a big cheer. Anything that stood out to you from the earnings? And then we'll of course get Asesha to parse those numbers for us.
So, as you pointed out, there's nothing much in terms of results to read into, either in terms of your analytical ratios from Ultratech. Growth is steadier, and therefore the company is probably headed towards doing better on a growing term basis. As it is, most of the cement companies were doing better because of the capex infrastructure thrust and the capex boost that was coming in the entire last year, and there is a spillover that is likely to happen as we go ahead. Probably that is the only takeaway from the results. Nothing in terms of specific on the analytical ratios of the results.
That's on Ultratech right now. Let's just mark a couple of other movers. And of course, the railway stocks are the ones which are really flying off high. RVNL, IRCTC, they're all a buzz in trade. Look at the move that you're seeing on RVNL right now. IRCTC, of course, is holding out very, very smartly in trade. In fact, IRFC is the other one, now more valuable in terms of market cap than an M&M, Bajaj Auto, and some of the other Nifty major names as well. Kunal, just to check on what you now read on the charts for both IRFC and IRCTC as well, which has been the sort of last railway stock to participate in the rally.
Yeah, so IRCTC is the last one, I think, but I still believe that even after this rally towards 970, 980, the stock still looks quite fresh for a breakout or a further up move. When we compare this to 2000, I think 2021 highs for IRCTC, and then the correction which had happened, more than 50% odd correction for the stock from the all-time high levels, then a slow gradual recovery, and then a late move as compared to many of the railway names. I would still believe that at current levels of 980 proximity, there should be at least a 10 to 15% upside further from a very immediate short-term perspective. And for many of these other railway names, likes of RVNL, IRFC, etc., even after this 5-day, 7-day up move where these stocks have gained 30-40% in the last 1 week or so, I would still believe that there is more meat ahead for these stocks, because these stocks are now moving into a different tangent altogether, into a fresh breakout on the monthly charts. And I believe that you might see those phases of pause in between, but the longer term trend for these stocks is definitely on the upside.
Okay, the longer term trend for some of these railway stocks is on the upside, but let's just wrap up that point on Ultratech Cement as Sesha is joining us. Sesha, what did you make of the numbers? Any key highlights?
Well, yes, the company indeed has reported better than expected set of numbers, and the internals also look good, very strong. Realizations have risen by about 2% on a sequential basis, in line with the rise in cement prices that we saw sequentially. And as far as margins are concerned, it has been a big beat this quarter. Margins have come in at 19.4% versus expectations of 19%. And on a sequential basis also, margins have risen by as much as 350 basis points. Management's commitment to increase its capacity to about 200 MTPA by FY30 remains intact. The company said that in the medium term, that is by FY25, a capacity is expected to expand to 157.3 MTPA. Management commentary with respect to the outlook is also very positive. All in all, numbers look very strong. Margins are a big beat this quarter, and the outlook is also very positive.
So that's the latest on Ultratech Cement. It's a thumbs up across the board, and of course the commentary is also something which is getting a thumbs up. But I wanted to shift focus and talk about a couple of these chemical companies with you, Naresh. Aarti Industries, a big breakout on that counter today. Of course, MK had initiated coverage, and that's providing a bit of a fundamental support. And the other one is Deepak Nitrite. Any other name and even a view on these two charts? Because now Aarti Industries is up in double digits.
So would have an avoid on both these names. One, because Aarti has already moved up quite a bit, so the risk reward is not there, up already 10%. Deepak Nitrite, for the fact that every time the stock has tried to break out over the last few months, we've not seen a good follow-up action. So in that case, you want to avoid. And overall, if you look at it, we've seen a lot of false breakouts in the whole sector. So chemicals as a sector is something which I'm avoiding purely because the risk reward is not great in some cases. In some cases, there is no follow-up. So for me, it's an avoid.
As far as some of these chemical names are concerned, but Mahantesh, your view, the chemical sector time and again has been coming back. There have been, a bit of a downturns in the buying opportunities that some of these stocks had given. But if you look at the 12-month charts for some of these stocks, phenomenal returns across the board.
Sorry, can you repeat the question, please?
Mahantesh, the question is on specialty chemicals and the entire opportunity there.
Sorry, there's some disturbance. I'm not able to hear you.
No worries. We'll try and repatch that line with you, Mahantesh, so that you're able to hear us a little more clearly. In the meantime, let's listen into the clarification coming in from the Polycab management, because they talked about how there have been some, of course, searches which were made by the income tax authorities, but they haven't got any document or any notice or any official order from them. And they are saying that it's not going to have a material financial impact or any other big impact. Listen into what the management had to say of Polycab.
Search is a slightly longish process because a particular wing of the department is involved initially for search, and once they conclude their process, which generally takes around 2 months, in few cases probably more than 2 months, they then provide that report to the assessing officer, and then assessing officer takes the final decision and communicate the final conclusion to the assessee. So this is what was what we experienced. I am aware about the press release. I am assuming the department followed its own set of processes, and that is why they released that press release. At this stage, since we haven't received anything from the department, we are unable to comment more than what Inderbhai has already covered in his opening remark. And as we mentioned to the other investors as well, we'll continue to cooperate with the department, and we are looking forward to maintain our focus on the growth and take the company to the near heights in the quarters and years to come.
Okay, so that was from the Polycab management, but Airtel, that's the stock which has not only managed to hit that 4-digit mark, but has clearly scaled 1100 very easily today as well, sitting with a gain of around 3-4%. And I would request to pull up maybe a week and a month's chart to see the kind of run-up we have seen there. But what's your take, Kunal? The bulk of the rally is behind, or this is just the initial part of the breakout?
No, I think Airtel has been one of the most subtle stocks in terms of the large cap names. When we look at the last 12 months of rally, 12 months back, the stock was at 750. In the last 12 months of monthly gains, I think there have been just 2 months where the stock has given mild negative returns. But then, consecutively, if you look at it, the stock has given classic returns over the last 12 odd months, from 750 levels to 1000, then from 1000 to now 1100 plus, where the stock is trading. I think it's moved fabulously well, and this is a class the indicator that the stock is going into a very strong multi-year long-term uptrend, where it would probably keep on moving up higher in a very slow, steady, in a gradual manner. If you look at the month till date returns, the stock is up some 9%, and from those 12-month lows, the stock is up almost 35-40%. So I think when we look at this in the entirety over the next couple of years, I would probably be of the belief that Airtel should be closer to 1400, 1500 marks. So more of a consistent stock, and for traders who have long-term kind of a time horizon, 2 years plus, I think can consider buying the stock at current levels.
Okay, 1400 to 1500 levels expected in Bharti Airtel. But I think we have Mantesh back with us. Mantesh, hoping you can hear me a lot better now. My question to you was on specialty chemicals, because today Aarti Industries is seeing a big breakout. Deepak Nitrite too. Have you been watching out this space? Any stocks that stand out for you?
So not specifically the talks that you talked of Aarti and Deepak, but the specialty chemical space is indeed doing really well. And I think that has got to do with the overall share of Chinese products coming down. There are a host of chemical companies now in the listed space. So there is an ample choice available from the investor's perspective to pick and choose in terms of the chemical space. In fact, if you'll notice that you should be looking at the chemical and the pharma space in a way together, and you'll notice that many of the pharma companies are also coming back in terms of their performance and deliveries. Simply because the overall cost structure within the specialty chemicals, most of which goes into the pharma space, is either coming down in terms of cost of production, or in terms of volume absorption is really getting higher. So therefore, you'll have better choices within the pharma space when you look at the sector together, pharma and chemical as a sector together.
Pharma and chemical, these are the sectors that you're looking at it together, and the entire overdependence there. But just shifting focus and looking at some of the metal stocks which are actually perking up right now. Take a look at Jindal Stainless. That stock is high by 4.5%. Hindustan Copper is seeing a solid rally as well. Let's pull up some of the names and you will see that there's a metal rally underway. Hindustan Copper, NMDC, APL Apollo in terms of the pipe companies, Tata Steel, Nalco. Some of these stocks are actually sitting at the highest point of the trading session, and the other pack which is actually now outperforming a bit is the oil and gas space. So ONGC up 3.5%, IOC up 3%. There are those comments that came in from the oil minister saying that we are not pushing anything down the throat of these oil marketing companies, and we are not telling them anything either way, and that itself has supported the sentiment on these stocks. But the other one which is down and out in the trading session is Z Entertainment. My colleague Ankur will join us with the latest on that, because it looks like there is some development there in terms of the meetings which have been held at the company level, at least at the Sony end. So let's see what comes out of that. For now, the street is factoring in a bit of a weakness. But in the meantime, if I can, come to you, Nuresh, as far as some of these metal stocks is concerned, what's the top recommendation?
mining space more than the steel space. So NMDC looks promising. It had a decent correction from 225 to almost 200, 205 levels, has started recovering. So NMDC could again go back up. Then another PSU name, which is Moil, which has given a fresh breakout. The stock has given a multi-year high as well. The stock used to be 280, 300 back in 2018. Now it has come back to those 300, 330 levels. So Moil looks interesting as well as NMDC. And in terms of steel, I would continue to look at the smaller names as such, wherein Kalyani Steel's KSL, which has given a good breakout, has made a multi-year high. So I would focus more on the small cap steel names or focus on NMDC and Moil.
NMDC as well as Moil, but Z Entertainment, that's the stock that we were talking about. Ankur has been tracking the story for a very, very long time and very, very closely. Ankur, are you hoping there'll be an end to the story either way, at least in the near term, because Jan 20th was the D-Day, but ahead of that, crucial meetings underway?
Yes, there is an important meeting which is held by Sony. Now they want to consider whether or not to extend the merger timeline. Remember, till 21st of December, the 2 years time period when this merger was supposed to be implemented ended, and after that both the parties, meaning Z as well as Sony, engaged in talks for extension of merger, that too in good faith. Now the time period of good faith is expiring on January 20, and both the parties need to take a call whether or not to extend the merger. What we have been given to understand is that Sony is mulling whether or not to do. As far as the obligations are concerned, we have been told even if Sony decides to call off the merger, they do not need to pay any penalty for that, because there was no clause in the merger completion agreement as per sources in the Sony side. However, Z has been maintaining throughout that they were in discussion with Sony and they are hopeful that this merger should fructify in near future. So all in all, it depends on what Sony actually decides whether to or not go ahead with the merger.
The ball is firmly in the court of Sony right now. Let's see what decision they come up with. Thanks, Ankur, for joining us with that. Time now to slip into a very short break. But before that, let me thank Mahantesh for making time and speaking with us. And let me bring you a quick programming note as well, because over the past decade, Karnataka has evolved into the second largest global hub, boasting multiple R&D centers that cater to all global sites. Karnataka is at the forefront of clean mobility initiatives, seeking to encourage Volvo's participation in cars, buses as well as trucks. At the World Economic Forum in Davos, Volvo expressed their appreciation for Karnataka's efforts in energy storage and renewable energy installations, and the company is excited to share global experiences to contribute to shaping the future of the automobile industry in India. Listen in to this exclusive chat as we head into this very small break.
Well, representing the Volvo Group, then with trucks, buses and construction equipment, our footprint in Karnataka is very, very important to us. We last year celebrated 25 years in Karnataka, and it's a very important footprint of ours. We have also our second largest R&D site in the world in Bangalore, which is then supporting all our three truck brands, the Volvo trucks, the Mack trucks and Renault trucks globally, both when it comes to application engineering, but also then platform engineering when it comes to different electronic components. So we are extremely happy being in Karnataka.
Oh, lovely. That sounds lovely. And also, how were your discussions today? And what are your expectations?
We are expecting a lot because the whole transport industry is in a big transformation. We are taking it from a currently, as we call it, the brown platform based on fossil fuel, and we are going to make the transformation into the green platform. And it has been a very, very fruitful discussion with the minister today, understanding the different steps that India and Karnataka is going to take. And we have tried humbly from our side to bring our experiences to the table in order to take the right measures. So a great discussion today.
In terms of business expansions, especially in Karnataka sector, what exactly are you looking at in the future?
Now we are always looking at possibilities to grow further, and when it comes to R&D, since I'm responsible for R&D, we have an intention to continue to grow in Karnataka. Thank you.
Welcome back. Well, the market is holding on okay, 21,600 thereabouts. We also have Nitin Raheja joining us from Julius Baer to talk to us about the fundamentals of the market. But Nitin, before I talk about markets, let me ask you, are you working tomorrow as the rest of us, given that special session that NSE is holding?
The operations people. So yes, for that limited time, we are working.
Call me a sadist, but I'm happy to hear that there are other people working as well. Let me put those details on board and quickly get Snehi into the conversation. Snehi, fill us in. What are the important timelines that we should watch out for tomorrow? What time does the trading actually start? What's the break like?
Well, yes, both the exchanges, the BSE and NSE, are going to conduct a live special session tomorrow for the FNO equity trading segment. Let's understand why this is being done in the first place, and this is as per a SEBI mandate. The exchanges are required to perform a switchover from their regular platform to their disaster recovery or their disaster management platform tomorrow as part of their business continuity plan. So come tomorrow, BSE and NSE will orchestrate an intraday switchover to their respective disaster management sites, and both exchanges will conduct two special sessions tomorrow. So the trading tomorrow will be done in two special segments. The first one, the pre-open will begin at 9 a.m., close at 9:15, and the session will start from 9:15 to 10 a.m. For the second session, the pre-open will begin at 11:15, close at 11:30 a.m., and the trading session will commence from 11:30 a.m. until 12:30 p.m. tomorrow. Now let's understand why this is being done and what's so special about this trading session tomorrow. The first thing to note is that usually when stocks are traded in the FNO segment, they do not have a circuit limit. But in tomorrow's trading session, stocks in the FNO segment and futures and options will have a circuit limit of 5%. That's one important factor to note. Along with this, also remember that the stocks that have a regular 2% circuit filter will continue to have that tomorrow as well. Another key thing to note tomorrow is that the securities that you purchase in today's trading session cannot be sold off in the special session tomorrow, and the ones that you purchase in tomorrow's session cannot be squared off on Monday. So well, watch out for tomorrow's live trading session.
Well, yes, unfortunately, it's a Saturday, but it's going to be a working Saturday. But today as well, there are a whole host of earnings lined up post the market close, and one such earning is HUL as well. Wanted your take, Nitin, not just about HUL, but the entire FMCG basket, because for bulk of last year, there was this, underperformance from the sector, though in the last couple of months, we had seen a bit of an uptick. What's your take? Is the worst over? That entire rural demand has bottomed out now?
Well, anecdotally, at least when you talk about the two-wheeler people, two-wheeler companies, sorry, they're talking about a revival that is showing up, at least the initial signs of revival. So I think while we haven't had full-fledged data that is out, which sort of were to support the fact that there is a revival, but clearly there are early signs of a revival in the rural economy. And if that were to subsist, and also, as we generally get into an election, there is some amount of spending that takes place in the rural economy, more to do with infrastructure. So yes, you should see some signs happening there. And the fact that inflation in some commodities has been benign, while food is yet a little bit of a sticky item, you should see some of these FMCG players sort of show up a little better results.
A little better, even if not a whole lot better, but there will be some improvement as far as FMCG earnings are concerned. But separately, what do you make, Nitin, of the private banking results that we have seen so far? Is it making you change your thesis on any of the names, or you're holding your ground when it comes to the private banking space?
So, it was our view for some time that we had seen peak net interest margins for these banks over the last 2 quarters ago. Now, I think what you're seeing today is also a further challenge which has come up in terms of deposit mobilization, which could impinge on credit growth as we go ahead. So, but having said that, I think a lot of it is already in the price if you look at valuations of these banks. So we continue to remain positive on the whole private banking space. We think valuations are looking attractive, more so because there has been such amount of selling that has taken place on part of FPIs. And if I have to scan around today, relative to growth, even if you account for the fact that credit growth could slow down in the short term, if you have to account for that and look at valuation, I think it's all there in the price.
Okay, so that's an important statement. There is, even if you factor in the weakness, it's now in the price. So probably some of these stocks are reaching that buy zone. At least that is what the some of the RSI indicators are also indicating, that HDFC Bank, for instance, had gone into the oversold territory as well. But time now to slip into a very short break. But as the World Economic Forum 2024 reaches its culmination, Times Network is bringing you an exclusive interview with Dr. Shyam Bishan, the head of Center for Health and member of the Executive Committee, World Economic Forum, with Mihir Bhatt, the managing editor at Times Network.
India did play a crucial role in handling COVID, and the way they rolled out vaccine, everybody feared the worst case scenario for India considering the population that we have. And there were initial hiccups, but then the rollout of vaccine was, I think, one of the smoothest in the world. What role do you see, you see India playing going forward in any such health emergency?
Yes. No, so kudos to the government of India. I think definitely they did a great job in making sure that the vaccines were made accessible to large population. I think over 1 billion doses were delivered within a few months. So that's a great work there. But as you know, India is also pharmaceutical hub of the world, I would say, for generic pharmaceuticals. I think India supplies more than 60% of vaccines to the world. So I think India has a critical role to play here, not only to make sure that its own citizens, 1.3 billion people get vaccinated in case of a challenge or pandemic, but also, supply vaccines, to the rest of the world. India already did that to many countries, but I see that there is an opportunity for India here to take a leadership role at the global stage and become a supplier of the vaccines and medical countermeasures to the rest of the world. So I think India has a big role to play here, and India is poised to do that.
Welcome back. Well, Dixon Tech is seeing a bit of a breakdown from head and shoulder chart pattern, has hit a 1-month low on an intraday basis. Of course, the news of the DRI making some surveys that its facilities or the subsidiaries facilities not helping its case, down in the trading session. The other one is Manappuram Finance. It's seen quite a bit of breakout from 6-session consolidation. It's up 5% in the trading session today, so watching out for that. Indocent, of course, has seen a breakdown from the upward support trend line. It's been declining for 4 sessions, and today a bit of the asset quality concerns is weighing on that counter. You also have IRFC, which has been advancing for 3 months on the trot. It's gained 60% in a matter of a year. It's trading above all its key moving averages, has hit a record high on an intraday basis, and of course the market capitalization has surpassed a whopping 2 lakh crore rupees for IRFC. So that's the kind of gain that we're seeing on that counter. But the big one that everyone wants to talk about today is, of course, Reliance Industries. It will come out with its earnings. What we should expect is something that Somit is joining us to tell us more about. Hi, Somit.
Well, for Reliance Industries, if you see, it is expected to be a muted set of numbers. Revenues are expected to be high by around 2%, but on the EBITDA front, we can see a decline of around 1.7%. Margins are expected to contract by nearly 70 basis points, while net profit is expected to be low by around 3%. Now, if you see segment-wise performance, it is the O2C segment, which is expected to report a decimal sequential performance, 12% drop, which will lead to an entire EBITDA dropping by around 1.7%. Apart from that is the retail segment, which will see a healthy growth of around 7%, while the gas exploration segment is also expected to report an 8% growth on a sequential basis. Now, the reason why O2C segment is expected to report a weak performance is because of lower throughput and lower spreads. Now, lower spreads are because petrochemical margins were lower and throughput were lower because there was a planned shutdown in the third quarter of FY23. Retail segment, FY24, retail segment would benefit on the back of higher footfalls, store expansion and operating leverage, while the gas exploration segment is expected to benefit owing to higher gas production and because of lower costs that we had seen in the third quarter of FY24. To sum it up, it's the O2C segment that would report a decimal performance. Apart from that, all the other segments are expected to report a sequential growth.
And even for Jio, right, you are expecting a revenue jump up of 2.7%. 2.7%. The net profit is expected to jump up by 2.7%. That's because the ARPU is expected at 183 on account of the higher subscriber addition. So that's the expectation from Jio as well. But shifting focus back to what we were discussing as well, Nitin, and that's about the public sector entities, the kind of massive re-rating that we have seen last year, not just of the public sector banking stocks, but even the defense ones, the railway stocks, even the general insurance companies are now seeing a huge uptick. What's your view as to how one should visit the entire public sector entity space now?
Well, you'll have to look at it differently. So, for example, I think when you look at the public sector banks, I yet see, from a valuation perspective, there is enough scope in terms of a re-rating and growth that could take place. More of a growth rather than the re-rating part. But yes, clearly, when you look at, some of the defense sector space, I think a lot of it is getting valued based on order book. We forget that these kind of businesses tend to be lumpy, and from quarter to quarter, there could be big variances. But right now, there is this whole order book and the whole indigenization story that is being played out, and hence the sentiment has been extremely strong. So, but some of these valuations, if you ask me, are do not really leave too much margin for error. Railways, again, you are seeing something similar take place in terms of the valuations, and so from a margin of safety perspective, I think it just seems to have discounted almost most of the upsides that are possible. And let's not forget, this is also all because right now most of the economic growth has been driven by the infrastructure and capex spending being done by the government, which has been sort of doing most of the heavy weight lifting. You'll probably see some amount of lull in the next 3-6 months as we get into elections, and there is a cooling period, and post that, by the time ordering starts, it'll take some time. So you will see a 3-6 month lull as far as a lot of these capital goods and infrastructure companies are concerned, more specific to the government. But banks, clearly, yes, there is yet scope for an upside.
Still see scope in the banking public sector banks, that is on the upside. Interesting take. But let us go across to a technical guess and get some BTST ideas, and it is truly BTST because the trade is open tomorrow. Naresh, let me toss it to you. BTST, STBT, what do you have for us?
So two BTSTs on stocks which have hit new 52-week highs today. First, a buy on BPCL. Momentum continues. Stop loss at 478. Target price of 495. Second is a buy on Indian Hotels. Fresh new all-time highs here. Stop loss at 475. Target price of 495.
Hey, Kunal, what about you?
So two BTST calls. First is the one Apollo Hospital, something which we flagged off a couple of days back. Targets revised to 6,200. Stop loss to be kept at 59.50. And second would be a fresh buy on HDFC Life. This is a complete contra call. The stock is almost at its previous major swing lows at 600, 610 odd levels. So would suggest a buy with a contra expectation that this could be a major bottom in place for the stock. Buy with a target of 660, stop loss at 600.
HDFC Life, that's the interesting one that Kunal is pointing out. But before I move forward, I need a chart check, Naresh, on a couple of these names. Z Entertainment, it's taking a further slide of 7%. Seems like that people are losing the patience on that one a bit. And the other one is Oracle Financial Services. We have been chatting about it, but it's up another 4% right now.
So Z is something which has been a mirage in terms of the way it has always reversed from that 290-300 mark. So would not look at it. Would look at it only once the event is over, or if the stock prices crosses 290-300. On the lower end, 190-200 has been a major support zone ever since the last 2 years. So no major view. OFSS, I would say this is a time to book profits. For the first time, the stock is actually going into a derivative ban as well. So, and the stock has moved up 30% in one session. So time to take some profits off on OFSS.
Okay, so that's a take on a couple of these buzzers in the trading session. What else is happening in the market? Well, it's fairly quiet in the sense that not much has moved in the last 20-30 minutes as such. The index is around that 21,629 mark. IndusInd continues to slide. HDFC Bank is down another 1%. So if you were taking solace in the fact that ADR had ended in the green yesterday, well, there's not much to congratulate right now because the HDFC Bank stock continues to trend lower. There's a cut of around 1%. Let's also take stock of what HUL is doing ahead of its earnings. And quickly, let's go across to Vinny to get a sense as to what we should expect in the numbers because it's trading at the highest point just ahead of its earnings. Vinny, is the street expecting a lot more improvement in the numbers?
So absolutely, in terms of HUL's numbers for Q3 FY24, we're expecting a muted performance, nothing exciting on that front. In terms of the revenue growth, around a 2% revenue growth is what we're expecting. Profits and around 8.7% growth, while margins, a slight bit of an expansion, 80 basis point expansion on a year-on-year basis. EBITDA margins are expected at 24% or approximately. Volume growth, like last year, we have seen, last quarter, I beg your pardon, we've seen in terms of the low single digit. That's what expected to continue this time as well. So 2 to 3% volume growth is what we're expecting from HUL. Now, let's not forget, the trends that we've seen in Q2, similar trends is likely to be seen in terms of the competition from local players, regional players. Where is that headed? That is expected to see an increase as well, is what the indication we're getting. So yes, that continues to be maybe a pain point in some segments for the company. Premium segment, that's expected to do better than the mass segment. And personal care performance, we're expecting that to be soft due to the delayed winters. Other than that, food and refreshment, low single-digit growth as headwinds were there in the nutrition portfolio. Let's not forget the retail milk prices. That's not seen a sharp cut down coming in. So in terms of Horlicks, we are not expecting any price drop in Horlicks so far as well. But let's keep
an account. You think any material announcement that one can expect? We lost that feed. We'll just get back to Nitin in a second from now. In the meantime, just looking at how the market is wrapping up for the day. While of course this week we've had a bit of a choppy ride, 1.5% lower thereabouts is where we are settling in at that 21,643 odd mark. Kunal, I know we'll have the same discussion tomorrow because remember, tomorrow is also a trading day. But how are we pegged for next week, given what we've seen with the market this week?
But this week is longer. Next week is going to be truncated. Don't forget the Friday holiday.
So fortunate for that. But one thing is very certain that this market is not the same market what we had seen over the last 2-3 months because of the impairment which we've got after this correction in the large cap private sector banking names. So there's going to be a lot of hard work for many of the other large cap stocks to try and offset the losses from these large cap private sector banks which we've seen over the last 3-4 days. And if that's the case, then we may be seeing some bit of stability coming back into the indices. But if we keep on seeing some negative surprises and the price action for many of the stocks gets into a negative territory, sooner or later it's going to impact the index trends. So I think the best position or the best strategy over here is to have a slight light position size than maybe what one could probably have been taking in the entire end of 2023. I believe that it's a better strategy this time around because to try and navigate such kind of uncertainty where it's very difficult to expect whether the stocks will open with a gap up or gap down post results, I think it's better to go with light positions.
Okay, closing in, almost 1% higher, 170 points up in the greens, and that's not really giving you a reason to complain. What, of course, is going to be critical is what Reliance does today when it reports its numbers and how private banks move on from here, given that you've got ICICI Bank, Kotak as well, due to report their numbers tomorrow. And what we've seen from HDFC Bank, what a historic week it's been for HDFC Bank, this one. And what we've seen as a state for an inline set of numbers, which was IndusInd Bank today. By the way, RBL as well reporting its numbers, but we'll track those numbers closely after this quick break on the next show.